All right, everyone. Thanks again for joining. I know that continuing with these classes can be a challenge, so I appreciate you guys for hanging in there. Today's class is to continue to bring value. The focus is going to be picking up where we left off last time, which is focusing on the key activities to any recurring revenue business. So this is whether it's a product or a service. These are the key activities that you need to have documented, put in place, and accounted for so that you can grow in a sustainable and healthy manner. And so today's class is going to be another, for lack of better words, more abstract class where we're mapping those key 8 activities to a previous lecture on the financial statements. To give you some background, because I know this is going to be recorded for people who are watching this later. This course was mainly focused on digital literacy, but given the nature of our audience who are training the trainers, we are going to be talking about some of the more core business fundamentals and financial fundamentals that any entrepreneur, whether it's a product or service, is going to be covering. So let's go ahead and get started. I'm going to first start with refreshing ourselves with the 8 key activities. So if you can see here on my screen, and I'll make this bigger in a second. There we go. So you can see here, these are the recipes. I tried to go for like a recipe look. These are the 8 certain ingredients you need to grow the business. The first one is pricing and packaging. The second one is acquiring clients, and this can be through a number of channels. The third and fourth are going to be billing and collecting. The fifth one is going to be nurturing. So how do I constantly engage or remind my audience? And then 6 and 7 are going to be accounting and measuring. So for every interaction, call, payment, it all needs to be tracked somewhere and measured. And then the 8th one, to make all these previous 7 worthwhile, is to iterate. And so these 8 activities, while fundamental to a lot of businesses, we also need to have in place our core financial statements. So if you recall, let me share my screen here. So if you recall, we talked about the different financial statements that we'll need to drive a business, whether it's an e-commerce site or our own consulting, so our own entrepreneurial service, or whatever it may be. These activities and these statements are still going to exist. So I picked this site, Mercer Capital. I don't particularly endorse them or anything, but I like the way that they graphically showed this. This is how I was taught how these statements work, and then this a similar diagram. And so I'm going to start from the left side, I'm going to start on the right-hand side and go this way. So it's going to be sort of like counterclockwise. And the reason why I'm starting with this one is because the income statement is going to be the most frequent. It's going to be something you'll be doing monthly. It can be daily depending on your business type, but this is something you're going to be doing monthly. And this monthly statement is going to feed into this statement of cash flows, which is going to be happening on a continuous basis. So let me actually zoom in here. I don't know, different people's screen resolution. So first and foremost, all of these connect to each other. And if you can recall from the 8 key activities, we're going to start mapping them this way. So pricing and packaging and billing and collecting are all going to be the first 4 steps here and here. So when you price and package your customer, you're effectively thinking about how your revenue is going to be built and what cash expenses you need to have in place. When you talk about things like acquiring a customer, you're really going to be looking at EBITDA. EBITDA is short for earnings before interest, tax, and depreciating assets. And this is just fancy for, as I'm acquiring customers and they're paying me money, it costs me, whether, a percentage wise or dollar amount wise, some amount to acquire them. And the difference between them is my EBITDA. So intuitively, if you spend more on acquiring customers versus how much you bring in, what will your EBITDA be? Please type it in the chat. If you spend more on acquiring customers than what you get in the revenue that generated from it, is your EBITDA going to be a plus or a minus sign?
Negative.
Negative. Awesome. So the intuition here should continue on, right? As we get plus and minuses in our EBITDA, we start to get an understanding of our operating income. We start to understand how much money it took to host their data or acquire a product or dispense a service. We start to get all these different operating income expenses here. And that brings us down to our net income. We will not be going over taxes in this class because that is like, that's like a whole master's course. But that is the goal here. Steps 1 through 4 of, I'm getting chats. Here we go. Angel, EBITDA stands for earnings before interest, taxes, and depreciating assets. So an example of depreciating asset would be, I'm going to pick on Apollonia here, so feel free to say something if she's in the chat. But Apollonia is doing a blender business, right, in our class. So if she buys, let's say for, imaginary practices, let's say she buys 100,000 juicers, right, for her business. As she's using them, they depreciate. Right, the actual act of using the juice and blending it and whatnot, it depreciates the asset. It wears out the asset. That can be captured as an expense. Okay, and so for people who don't have a depreciating assets, you may say, well, what am I supposed to do with that? You can just skip on down to the other aspects of the income statement, and that's the beauty of this flow. Is that it's going to be congruent to your business. So I'm going to keep going on here to the next statement. So we've gone through activities 1 through 4. I'm doing a poor job of showing both here, both the recipe and the A statement. Sorry, but we've gone through steps: the pricing and acquiring. We've gone through billing and collecting, and so now we're in the statements of cash flow to continue on with mapping this. Statements of cash flow are going to be critical because if you're not able to keep track of where your money is coming from, it can be very difficult to understand how you're doing as a business. So we're going to start off right where we left off, which is the net income. So net income here is going to be the main starting point to fill in these other components. The best way to read this section so that you're not overwhelmed is the top part is going to be how you made money and how money came into the business. The middle part is going to be where did that money go? And then the last part is going to be an extension of where that money go. But are you, are you doing any financial activities or raising any capital? So as we generate income, we're going to need to we're going to have some changes in our working capital. Changes in working capital are just fancy for, as an entrepreneur, you're not just doing things in a vacuum, you're interacting with other people. So you have vendors, you have employees, you have all these different sort of day-to-day activities that cost, that take capital to complete. And so those changes in working capital can make a business grow if the change is positive. And if your change in working capital is negative, that means as you get money in, you're actually creating more losses for yourself because you have more destinations outside of the business for the money to go to rather than inside the business for the money to stay inside. We can go into those examples later on, but I want to keep the flow going here. So as we go through the changes in our working capital, we now get into operating cash flow. Operating cash flow is just fancy for What all did we do with the $100 that we were given from the bank? Or what all did we do with the money that we raised from our VCs? Did we spend it on buying a new business or buying a new, asset? Did we spend it on selling assets or selling some parts of the business? So to pick on Apollonia, or we can pick on Satoshi, an example. Satoshi's statement of cash flows, because he's going to be selling these really cool hoodies, is going to be, hey, I spent some money trying to buy some more inventory. And then I also spent some time, getting rid of some old inventory from last year. Some of these old hoodies, they were on my books for about 12 months. So on the 13th month, I marked them down for 40%, and then I got some cash from that. Boom. So that's what those operating cash flows could look like. Investing cash flow. Now, I won't spend a lot of time on this because this is going to be, we are talking to sort of startup business, but this is just fancy for if you're a business, say like a startup, as one example, and you raise money, that has to be captured in a statement. Ideally, ethically, it needs to be captured in a statement. And the way you would do that is you would say, hey, I went to, X and X Capital, and I raised 5,000, I issued 5,000 shares for $10 a piece. And that money is, they gave me they bought the shares at that price. And so now I raised that money to, again, start the process for all these other things. So I'm going to take a pause here because I realize this is a lot, but I want to take a pause here to see if this makes sense, if this is helpful, if you want me to kind of jump back and forth between this statement and the 8 key activities. But I wanted to take a quick pause here. Satoshi is giving me a yes. Awesome. This is great. Anyone else? Is this a thumbs up? Is this boring you? Just want to make sure that this makes sense, because being able to talk through this is what bank, finance institution looks for, venture money, whoever you're trying to raise money from. It could even be someone more local, or not local, but it can be your mom and pop investor. You still need to be able to talk through this.
For me, it makes sense. I guess if you could just jump back and forth, and then continue to give like more examples.
Yeah, I'll
real
do
life
that.
examples.
Yeah, give me a second, because I realized that it's not. Give me a second. I want to see if I can pull up both tabs.
Well, and then also I think we need to zoom out on this tab here for our viewers that are seeing it by video, because they're seeing the screen but they don't have context, and they might not have their audio on. So yeah, that zoom out is important. So if you look here, he's using Exhibit 1. The principal components of the financial statements relate to one another in predictable ways. Ultimately, if you're not able to see the screen when you're listening to this recording in your car or while you're on a tram or something like that, it's basically saying, how does all of the financial statements in your business coalesce or work together? How do they get along? That's the idea. Now, yes, if you happen to come back and see the chat, I was making big jokes in the chat. We need some levity sometimes when we talk about numbers. I said, in short, hire a real certified professional accountant, CPA, and a bookkeeper. The reason why is because they will make sure to help you get it right. Your bookkeeper will help you know the categories to put your expenses, your assets, your income in. And that's very, very important. Okay. So if you are not seeing this live and you are just going through this, catching up on what we've taught, we're going through things that are going to help you be successful as a business owner in a micro, or help me out here, someone, was it Cliff Note version? A Cliff Note version. Okay. And so a Cliff Note version so that you can get to the gist of it and then fill in the things that you need from time to time. Now, hopefully you all can hear me well. My headphones actually died on me, but Andrew, give me an example of a place where you would like to see an example or hear about an example, please.
Can you bring back up the chart?
The financial chart or the 8 activities chart?
8 activities chart. But I mean, for the most part, I pretty much understand everything. I think you're just giving good examples.
Okay, can y'all see both of these now? Can y'all see this right here?
Yes.
All right, sorry about that. All right, so I'm gonna quickly summarize what we've been doing so far because I realize some of this may be new to people, and some of this maybe already makes sense. So today's class, again, was to map the stuff over here, the 8 activities, to the key financial statements. So we'd already went over pricing and packaging, maps to revenue and cash expenses and EBITDA, acquiring maps to the operating expense, operating income, and so does billing and collecting. Once we map those first 4 to the income statement, we now have the statement of cash flows. And so the statement of cash flows are going to map to nurturing, accounting, and measuring. The reason why the statement of cash flows are going to map to these parts is because when you nurture your leads, that needs to be accounted in your operating cash flow. How do you spend marketing dollars, customer support dollars, or whatever it may be to nurture your lead, your audience? The account and measure components are going to map to the statements of cash flows because as you engage in the cycle of pricing a customer, acquiring them, billing them, collecting from them, and then fulfilling the services or products rendered, all those activities need to be captured in the statement of cash flows and accounted for. The reason why they are accounted and measured for in the statements of cash flows is because you cannot have a healthy or proper statements of cash flows without a healthy or proper understanding of your income statement. And none of these 2 statements can arise without the core 8 activities. So that's where we're at so far. We're now going to go to the third part, which is going to be the balance sheet. I won't spend a lot of time on the balance sheet at this particular stage in our entrepreneurship journey, but it'll be more evident what this, how this matters down the road. We've all heard, or I hope we've heard, assets equals liabilities plus owner's equity. If there isn't anyone who hasn't heard that term or isn't familiar with that term, please submit something in the chat now before I continue to go on. All right, so that equation, assets equals liability plus owner's equity, is shown here, but not necessarily in an explicit manner. When you have, or excuse me, what we have in this box are 3 line items that I think are probably the most important to our audience today. And that is net working capital, intangible assets, and net fixed assets, I'll group today. And then the last one is shareholders' equity. As you're going through your business, net working capital refers to what we talked about in the statement of cash flows, which is your short-term cash and accounts receivables minus your short-term accounts payables and expenses. And so that delta or that change in those 2 is what enables a business to grow. If your net working capital is negative, what that means is if you say are in Andrew's position, let's pick on Andrew for a moment. Let's say Andrew is, God forbid, selling his services for $2 and he's spending $200 on acquiring the materials, doing the marketing, having a fully branded website so his customer can come in, submit the request, whole 9. He would have a negative net working capital because as he keeps iterating on trying to spend $200 to acquire a customer and only charging him $1 or $2, There's gonna be a big no-no coming up real soon. So let's avoid the no-nos. Let's continue on here. So that's what net working capital refers to. Another example of net working capital, just to kind of beat a dead horse here, is let's pick on Satoshi, for example. Let's say that something goes wrong. Let's say that the Satoshi spends $10,000 on buying some hoodies, okay? And he does that at January 1st. Now a month goes by and he doesn't sell a shirt. But you know what he does is he spends money on a marketing ad to, a Google ad. Then he spends money on a social, like a distillery social. And it's now March, and for some weird reason, Satoshi still isn't able to get another customer. So he has 3 months worth of inventory on his balance sheet, right? On his statement of cash flows, there is no income coming. It's just expenditures. We can see that from over here. There's no revenue from holding those shirts and selling nothing, but there's an expense on marketing, there's an expense on buying the shirts. So if we were to go back to this net working capital, it would be what, people? Negative. Oh, wait. Satoshi said you never heard of assets you can own as liability. Oh, I'm sorry. Let me take a pause here. Satoshi, I'm picking on you, and I didn't even look at your comments here. I didn't even hear that. My apologies. So Satoshi, in this example, we said that I started off this section saying that assets equals owner's liabilities plus owner's equity. And this is a reference to everything that you own in assets has to equal the amount of money you paid to acquire them, and plus the equity that you have in getting it. So if your assets are less than your liabilities, then you have negative assets and high liabilities and probably negative owner's equity. So the equation still balances out. It's just all the terms become negative. I'm gonna pause here. Satoshi, does that bode well with you? Does that make sense? Okay, got it. Is there anyone else questions? I'm sorry, I'm not checking the chat here.
I'm keeping up with the chat, but it was just I figured you were going to see it there as well. I think that let's continue with a couple of examples here, because there's the number that you're on right now, Malcolm.
Right.
In terms of your 8 key, will you point the number out for our audience?
Right. So on the balance sheet,
We're going to need to hide that. Thank you, Malcolm.
Yeah, sorry about that. So to quickly recap, we are on the last section of the balance. We're in this section. I don't say last because it's continuous. We're in this section of the sheet of this diagram. It's the balance sheet. This maps to the iterate section because as you grow your entire equation, which is assets equals liabilities plus owner's equities, as you grow that, your balance sheet should grow. The number of assets that you have under your belt should grow. The number of liabilities that you have should grow commensurate to your asset growth, and your owner's equity should be growing. Conversely, if your business is underperforming, your assets will contract, your liabilities will increase, and your owner's equity will go down. So these are all in things that you have to balance as a successful entrepreneur. So I want to, again, for the sake of repetitivity, repeating myself, the way these activities map is you have pricing and packaging maps to the income statement, because you want to, in an example of Satoshi and his hoodies, he's going to be charging $150 for these graphics hoodies because it's made out of this, Patagonia wool, whatever it may be. So he's pricing them right. He's acquiring them through different channels. So he's going to have an expense for paying for Instagram ads which is a digital channel. He's going to have an expense for paying for Facebook ads because that's a digital channel. He's probably going to have an expense for informal channels, meeting people at dinner parties, taking folks out to lunch. So those are all going to be on expenses. Then, as Satoshi's selling these hoodies online, he's going to be billing and collecting them through platforms like PayPal or Stripe. And these tools are going to map to his bank account, whether it be San Francisco Credit Union or whatever it may be, Chase account, whatever it may be. It's going to map to those accounts. And so as he's mapping those activities to his account, he's going to have those tools feed into an accounting system. This accounting system is going to generate his revenue, label his cash expenses, his other expenses, and pump out a net income. His accounting system is also going to lead into his statement of cash flows, because as you're pricing people, that costs. As you acquire people, that costs. As you bill people, that costs. As you collect, that costs. Now we're going to the last 4 activities, which is going to be starting off with nurturing and accounting. We discussed earlier that the cash flow statement of cash flows is an ongoing and living document, and it should account for every dollar that comes in and out of your business. So as you're nurturing and accounting for the audience in this case, the audience that Satoshi has built, he's gonna see how he acquired them and how, he's gonna have line items for how he acquired them. He's gonna have line items for how he disposed of the different assets and sold things. He's going to have line items for the income he generated, because it's going to be feeding from his income statement. And then if Satoshi decides to go to the bank and ask for some working capital, or as say he goes to his family to raise capital to grow his hoodie business, he can outline, hey, raise funds from grandma. Hey, got loan from SF whatever. Or hey, got loan from Chase. And those statements will all be inside the investing and financing cash flows. Moving on to the third statement, we're now at the iterate and measure component of the recipe. The measure and iterate component will start out with our accounting system. We have free tools like a QuickBooks and Wave. And what they'll do is categorize all of our assets. So in Satoshi's example, it's going to be the inventory he has. Let's say that he does ad space on his website. So maybe his website is generating ad space from that. So that'd be considered an asset. And so then he'll have to list out all of his liabilities. So accounts payable to the shirt vendor will be an accounts payable. Accounts payable to Facebook, professional ads, whatever partner ads, I forgot what it's called, but that'd be a line item. Google ads, whatever it may be, those would be line items. And then the assets minus the liabilities will be what the Satoshi's equity will be. And so he's going to be measuring and looking at this, because he wants to iterate on this component so that all of these sheets grow and the values on these sheets grow. So I'm going to take a pause here, because I wanted to make this a short and concise exercise. The goal here is you may have to, if you want, rewatch this later on. But this, like I said before, I find that explaining it in this manner to internal organizations tends to unlock a lot of questions and really bridge the gaps between different departments. So I'd love to get some feedback, what you guys think. Like I said, this is the first time I've taught this sort of externally to this type of audience. So if there's anything you think I could clear up or any feedback, that'd be great.
I think it would be good to have like maybe a mock-up document just to show how would be best to like record these type of details. I know that it was recommended that you probably just have an accountant, but just so that your accountant isn't doing all the work and you not know what's going on at all, just to have a better understanding of what to look for, what to look at, and how to even practice it yourself until you can get an accountant would be nice. But ultimately, I think it's good how you explained everything, the examples that you gave, real world examples. It seems pretty straightforward for the most part. I believe that in layman's terms, you're just saying, be aware of what you're spending, and make sure that, you have it in a safe place so that you can look forward or look at it at a later time just to know what direction your business is going in.
Here you go. And I believe in taking care of business right at the jump. This is an Excel spreadsheet that can be used. And this Excel spreadsheet will be able to show income and expenses. And these are things that you can make yourself, or you could get, and the conditions for setting that up. You can use a template. Excel does have templates for that. If you're not using Excel, there are other programs that do have templates. However, let's start where we're not doing templates. Let's say we're just wanting to, and Malcolm, if you don't mind, I want to make sure I get some of this, the gist of this for everyone.
Yeah, I'm not to mean to hijack here, Steve. I was going to actually show them wave accounting, because I realized the manually preparing this sometimes is really daunting, and so I want to bridge the gap between what I talked about from a flow to like what this will look like from a work experience. So I'm gonna do that, and if that's okay with you.
Yeah, if you give me a second, actually, I think that's not only awesome, but I wonder if I'm willing to see if I can show them some of my own using wave accounting on the back end in one of our organizations. So if you'll just give me 1 second here.
Yeah, I'll present in the meantime. So, Andrew, this is to you, big bro. So let me show you the screen here. Here we go. So this is first and foremost, this is a dummy wave accounting account. Account. But I wanted to bridge together what I just showed y'all from a financial statements to what this will look like. So wave accounting, we mentioned before, is an example of a tool. QuickBooks is a similar tool. They all kind of do more or less the same thing. But the goal here is that you could log into this, and as your business is humming along, you would get all these little activities. So you will see here, you get a bunch of green bars for cash inflow, and then gray bars for cash outflow, and then this line kind of moves along. But what I really like, to kind of bridge it all together is, actually, let me see if I can present my entire window, because I realized this might be more helpful. Yeah. All right, y'all see that? Okay, so wave accounting is going to be doing all three of these statements. In this mock-up example, if we were to fill in our bank account information, it would show up here, hey, pick a bank, and it'll pull in all that information. But right here in the reports, because it's connected to your banking system, you will see those three statements right here: the profit and loss statement, the balance sheet, and the cash flow. And if I click on it, what would we see? We would actually see all the different expenses that we labeled will show up here as an operating expense, and all our sources of income as right here, and it would give us the delta in between.
And if you hit show details at the bottom there, Malcolm, please show details. Show details is going to take you into a more detailed look at your expenses and your assets, and every tabulation that comes from an automated um, an automated pull from your bank account or your business credit card. So I think Andrea, in one of our prior conversations, and also Apollonia, we talked about this. It is best to use a business account. It is also best to use a single credit card if you are going to be making expenses or purchases for the business, and not commingle those things with your private funds. Now, that is not always possible. Apollonia had spoken prior conversations that she had commingled and that she was working to get those things separated. But when you first start a business, it can be difficult. But this particular free software, again, we're not being compensated and we're not official partners or sponsors. This software, we find it to be very useful uh, for bringing in that information so you don't have to do as much work.
Absolutely. And to continue on here, we talked about starting with the financials, the income statement, then we jumped into the cash flow statement. And again, here, this is no different than what we saw on this diagram. So I want to, kind of beat it in your head that there's a reason why this has to be parity. This is what people are looking for. This is what's standard. And so you would see here, so let's play pretend. If this was Satoshi's Wave, portal or his account, it would have sales from hoodies. It would have purchases. Maybe he bought, some packaging to actually ship the hoodies in it. Then there's gonna be inventory, so the actual physical hoodies themselves. Payroll. There's somebody in his garage packing up the actual boxes. Packing up the actual hoodies into the box. And then sales tax, because he's selling not in just California but in other states. Wham! Cash flow from operating activities. Satoshi doesn't have a property or plant or equipment. Boom! Don't need that. So now we're gonna go down to what Satoshi would have, which is loans and lines of credit. So let's say Satoshi did, he sold these awesome baller, super fly hoodies. Everybody's rocking the Ghost in the Shell look. Now he can go to Amex and say, hey, Amex, I need like $25,000. I need really $50,000 in credit to go do what I need to do. It would show up here as Amex, line of credit, 7011, account, blah, 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 credit. Boom. That'd be cash, net cash from finance activities. So then at the bottom, it'll show, all right, man, you use basically 50K in Amex credit to kind of get the ball rolling. You sold 200K worth of, gear. It's 150K and this ending balance. Boom. Then we jump over to our reports again, because again, we went from the income statement for Satoshi. We went over the cash flow statements for Satoshi, excuse me. Now we're going to go to the balance sheet. So we're going to go to Satoshi's balance sheet. And again, this should look familiar. Whoa, these line items look like these line items. That's weird. Whoa. So what would Satoshi's line items look like? All right, we're going to have cash in the bank, because again, he sold these fire hoodies. So we got 100K in the bank. We don't have many other long-term assets because we're not really in the business of a storefront. We don't really have, crazy, merch, retail footprint. So we're pretty lean. So the only really current asset is probably my van, because I want to go run these hoodies to my customers. Maybe that's the only asset. All right. So now one of my liabilities. Well, I got that $50,000 credit line from Amex. So that's not equity. That's a credit line from Amex. Since Satoshi's been doing good, you don't have any long-term liabilities. Maybe he got one other current liability, which is accounts payable to the hoodie people. He's got they fronted him $5,000 worth of hoodies, so he got to pay that in 30 days. So that'll be a current liability. Then we go down to the difference between the two. So we talked about cash. He had cash in the bank from selling these hoodies. He's got that credit line. He's got to pay up. Amex is not even just freely give you 50K. So the 100K minus the 50K he's got to pay up is what? 50K, the total owner's equity. And if we show the details, it'll get even deeper. And let's say he doesn't retain any earnings. Let's say he pours all his money back into the business. This number, what would, you see what I mean? This would impact this entire balance sheet. So I'm going to pause it. Oh.
We got some dead time here. Just want to make sure everybody's on the same page.
I'm sorry. I mean,
no, it's all good. It's all good. It's so are there any if your funds have been intermingled before and you're working on separating the two, what would you recommend doing when using Wave? When and where would you start? We're going to start at the beginning of a fiscal year. Okay. So for most people, their fiscal year begins January the 1st. Okay, so if you've commingled your funds, let's say you've used your Visa or your MasterCard for all of your purchases for your business, Andrew. The first thing you'll want to do is go through, and on the left-hand side of Wave, you'll see accounting, banking, and dashboard. It will go to transactions. If you go into transactions, transactions will allow for you in this particular program to go through and look at each one of your individual transactions, and it will allow for you to choose the ones that you say, hey, you know what, this wasn't used. And Malcolm, we want to make sure not to put any personal information here because again, this is going to be recorded in infamy.
I know. I'm trying to simulate to them what they would need to do. It's like they would need to you know, have some of this kind of mapped out on paper first before they jump into it.
True. And then, and so basically in your bank statements or in your credit card statements, you can go in and you could physically use a marker and only highlight those things that are business expenses. And then you can go and say, hand that to your bookkeeper, and your bookkeeper could take care of it. However, on Wave, you could take that same sheet that you've printed out. If you're burning paper, you don't want to burn paper, that's fine. You could actually go on to your bank and pull up that PDF and highlight on the Adobe Acrobat, highlight those things that you are actually used for your expenses, or once they've all downloaded in from your bank or your credit card, you could simply click the ones that you want to retain for your business. Okay. Now that makes it super easy. Now, there may be some cases, and this is the thing about using these platforms, there may be some cases where these don't actually follow through. Okay. It's because some banks don't actually communicate well with Wave. Like for instance, brokerage accounts. One of the brokerage accounts that I know that doesn't communicate well is Charles Schwab. So if you have a Charles Schwab account, it may not communicate over well, and you'll have to download the PDF and bring it over. And then there's a little bit more legwork for you. And that's when people begin to get very tired because it's so tedious to go through. Okay. But it's worth going through to separate the two funds. You take that, all the transactions that you considered business, and then you run a simple report. Okay. So after you've categorized everything, you run a simple report. Yeah, I've been banking with Schwab and having them as one of my brokerage for some of my many accounts, including business accounts as well, for over 20 years. Over on the left-hand side, you'll see reports. And so we'll click on your reports, and then that's when you'll be able to click a simple profit and loss, balance sheet, and cash flow. And believe it or not, they do it all for you. Okay, they do it all for you. So once you do the difficult work, Andrew, of separating those things out, they'll take care of all of the crunching and number selection and things like that. Now, I will say, many a times we're not educated on how to put those categories together. But if you look at the link that I sent for the IRS, I put that link into the chat from the IRS publication 535. It will detail for you what is considered an expense and certain categories that you can put certain things in. But Wave also helps you with little question marks as well for you to know those things. Okay. And so if you're happening to watch this on the fly, that question came from Andrew, and Andrew was just wanting to know, how do we separate out our commingled assets for our business, our commingled expenses for our business and our personal self? And that was a quick way to do it in Wave, an explanation in Wave. And then you can also have it by printing out a PDF or going to Adobe Acrobat or whatever your PDF reader is or editor is, and pulling the statement down on a per month or per year basis from your banking institution. If any of that was not clear, can you please just type something in the text or open up your mic and let me know? Malcolm, will you please go back to your eight basic steps for entrepreneurs, please?
Can y'all see this? Do y'all see it?
What we see is ourselves right now.
Hold on.
And I know we had some people pop into the class a little bit later, so I just want to let them see this brilliant 8 key activities that you put together. And for those of you all that came into class a little bit later, this is where we started. This is what we went over last class period. And where we went from here was Malcolm went into details about how the accounting part communicates with one another using this brilliant flow chart here from Mercer Capital. Okay. And he was able to show how we intersect the balance sheet, the income statement, and the statement of cash flows, or our cash flows with our income statement with our balance sheet. Okay. And that's what we've done. And we've dug in a little bit deeper thanks to brilliant questions from the floor for how these things actually look in terms of examples. So I'm going to ask the class a question here. Okay. And if you'll bring that back up, Malcolm, the basics of financial strategy.
Oh, okay.
Thank you very much. And looking at these two things in the class, in the text, if you don't mind, would you please tell me where a capital expenditure would go? Where would a capital expenditure go?
Close, Angel. Capital expenditures will go under statements of cash flows.
And the reason why it goes there, not just because it's listed there, but these are things that you're going to constantly be doing in your business. Okay. So let's say you're adding money into your business. Okay. You're adding money, your own money into your business. All right. That's going to go into your cash flows. Okay. And that would actually fall into your capital expenditures. Now, it's funny, Malcolm, I'm actually moving my mouse as if I'm actually talking to the class from my own screen. It's so hilarious. but that's just a trainer thing. So if you are a trainer at this point and you've had to get your own resources like Malcolm and I have, the best thing to do is to put those resources in context for your class. It's important that your class stays in tune to what you're doing and that you're meeting their need in the class at the moment. So let's audible here. Is there any question that you all have concerning these two items that Malcolm presented? And of the two items that he presented, do you feel like this is going to enable you to be more cohesive in your own business? Absolutely, Angel. Absolutely. And so Malcolm before had sent a link for that 8 activities. I believe that's the one you're speaking of, right, Angel? Or are you speaking of the Mercer Capital image? Mercer. Okay. So if you don't mind, yes, thank you. It's making me confront the fear of dealing with numbers, but I'm getting it into my head to get used to these things. I will tell you that, and Satoshi, I appreciate that. The numbers can cause a little anxiety from time to time, but ultimately, you simply focus on your passion, which is creating this amazing brand that you have underneath underneath your umbrella right now. And believe it or not, these numbers will start to make sense. And again, you can always hire other people to focus on the numbers. And these are people that you don't have to hire full time, but you can have a project person come in on a project basis and take care of these things for you. We just want to make sure that you've been introduced to these numbers. So to these numbers and to the words associated with these numbers so that you can win. Okay. I agree with that, Andrew. The idea of pulling back the commingling, and I wouldn't tell you anything that I didn't do myself. I've had to do myself, and the reason why is unless we start from a place of knowing, and this is more about the commodity of socioeconomic status, of not having privilege, of not having and recognizing that institutions have been created that care less about educating us in terms of business, but more about us being slaves to the system. Let me stop there for a moment. No soapbox moment, but in reality, the educational sector in K through 12 in the Western society is not built to help us be prepared for operating businesses. They're built to help us be prepared for working for others in business. And so we, without a mentor or an amazing insight from something that we've had in terms of our learning, in terms of our just being exposed to a TED talk or catching a glimpse of something on YouTube or watching some type of show, we wouldn't know that this world exists and that this is how it actually happens. We wouldn't know that every time you go into Hot Topic or Forever 21 or for in Gucci or Prada, that this is what they do on the back end. Or every time you go to a Chick-fil-A or a Roscoe's Chicken and Waffles or some other burger joint retailer, that this is what they do on the back end, unless somebody tells you, or unless you have the good fortune of having a mentor sit down in that place. And that is the sole purpose of this class. This is the sole purpose, to make sure that we introduce concepts that you may not have heard, so that now you have a leg up to be equal in the game that wasn't built for us. And us is quite a broad term, just so you know. If you feel like the shoe fits and you fit in the family of us, then so be it. If you don't feel like you fit in the family of us, then so be it. Malcolm.
Well, Steve, I don't have much else to follow up after that. I do owe you guys the document. I just realized I did not send it to you guys. It's in my draft, so that's my fault. So you will get a reply to the calendar event with an attachment so that everyone gets this. People.
Malcolm, you mean you're human?
Yeah, unfortunately.
Malcolm, I was over here thinking you were an AI bot.
I want to be AI, bro.
Okay, so yeah, we've made some mistakes. I'll own some of mine throughout this process. If you happen to be going through all of this wonderful stuff that has been set up through the Office of Civic Engagement, you may have noticed some snafus by yours truly. And so just know that if you're covering some stuff and you hear things that you shouldn't be hearing, or you think, wow, why is that noise happening in the background? Or why is that camera on? That camera shouldn't be on. It was me. As much as I love technology and engage myself in technology, from time to time, I press a button and things happen and I own it. It's all me. It's not representative of the beauty and the hard work of the Office of Civic Engagement or Malcolm or Ray. It's just me. I make mistakes. So as a business owner, I get used to saying that too. I make mistakes. I also get used to saying I tried my best. And that's what I want you all to think when it comes to this money stuff. Okay. You try your best. You do the best that you know how. And then you learn. You may fail a little bit, learn some more, and fail again and learn some more. It's just the general cycle of life. Most of the time, we're hard on ourselves, and we don't have to be as hard as we are on ourselves. But it's what we do. If you're hard on yourself sometimes, and you know that you're the hardest person, the hardest critic to yourself, go ahead and put "that's me" in the chat box. Yeah. Okay. I see you. I see you over there. So since we are our own harshest critic in this room, it also bodes well to know that when we think about our personality types, and that's something we started off in week number 1, going through our personality types. A lot of people who are inspired to be their own boss, to be the own CEO of their company, are oftentimes very critical of themselves. They have a good ability to look at themselves and see how can they grow, because without you, who else is going to grow your business? So if you're doing your accounting or your bookkeeping and you happen to put something in the wrong category, you have several people to help you. You have a bookkeeper, perhaps, if you hire one of those. They might be able to pump the brakes and say, hey, you know what? I don't think that belongs there. You say, oh, my bad. I didn't mean to put that there. And then if your bookkeeper misses it, maybe you have your accountant. Your accountant's going to be pretty sharp. They had to pass a lot of tests to get there, a lot of certifications. And then they'll say, hey, you know what? You missed this. And they'll be like, oh, you know what? I'm sorry about that. My bad. But if it goes by your bookkeeper and your accountant, believe it or not, there's this little organization called the IRS. And they tend to catch a lot of things too. And if they catch it, they might come back and say, hey, wait a second, that number seems a little high. And you might hear words like audit and things of that nature. Because things have been so strapped due to COVID, current event for you all, the IRS, or Internal Revenue Service, has been a little lacking in personnel. So instead of going after the really big companies that make billions of dollars, they find it easier to go after less complex stuff like small companies. And just in case you didn't know it, the majority of companies in the United States are small companies, companies with less than 5 persons. That's what makes the West work. Any questions?
I think that's also what intimidates me in terms of like doing my own bookkeeping, is the idea of messing up the numbers, which is kind of where I'm on this balance beam of, I know you said to just go through all of my old funds and everything, or everything that I spent on the past, but considering how much like miscellaneous fabric I may buy, or um, just different things here and there, it makes me kind of want to just like start all over. But then I feel as though that'll also set me back in terms of like properly gauging where I stand in certain things.
Hey, Andrew, that is a first and foremost, I appreciate that commentary because in that admission. Now, you realize the only reason that we bring it up is because there are the current law that we're under in the United States is to protect businesses. And those businesses are treated more favorably at times than the humans that run those businesses. So when we speak about these things, we're speaking about them to benefit you all in terms of your taxation. Now, if you choose not to take any of the breaks from your taxation and only report your income, then you could do that. However, you would be missing out on some of the advantages of being a business in the United States. How does that make you feel?
Oh, well, that's actually one of the things I look forward to the most. Just all the different ways in which small businesses can like benefit from those tax breaks. But like I said, it's just like sifting through dozens, if not hundreds, of different transactions and not knowing where to start.
Okay, well, let's do this. It's like that old saying that the journey of 1,000 miles starts with one step. I know I just ruined that. If it was Confucius or someone, I apologize to all of my philosophy people there. But let's start with January 1st, 2021. Okay, and let's work our way through one day at a time, and just go through their expenses that way. Okay. And I want you to look for big ticket items first. If there was a big ticket item, look for those first. Narrow it down to those things first. And just make sure that those expenses get taken care of. Now, you may have miscellaneous expenses that you miss. However, turning over your statements to a bookkeeper could be relatively simple. You all may have heard of basically something called the gig economy. Who's heard of that word, the gig economy? Okay. We as business owners are completely fortunate to live in the gig economy. Why? Because in the gig economy, we are able to get amazing services at reasonable prices, especially business people. Okay. Especially business people. So if you look, and I'm going to show you all something real quick here. If you'll go ahead and take a look at this link I just sent you, what do you notice?
They do virtually everything.
They do virtually everything. The link that I put in for those of you all that are not able to see or you're coming to this recording, I put in the link for something called Fiverr, and I want to share my screen. Okay. So what Andrew was just referring to is how difficult it would be for me to have to go through all of this myself. But let's say that we're looking for some just simple help, okay? And so I go down here and I can scroll through all of these different avenues. And I was like, wow, look at all this amazing business help I can get. You say, well, I don't see exactly what I'm looking for. I'm going to type in here bookkeeper. There we go. Bookkeeping. Okay. Now, look at these prices. Do these prices seem astronomical? Anybody?
No, not at all.
They seem quite reasonable, don't they? We cannot know what we do not know. We are here to shed a light into dark places. If there's ever anything that you all feel that seems impossible or maybe improbable, just mention it to us. Shoot us a quick email. We will answer you because we care. I can go over here to pro services, meaning only people that are pros. Okay. They said there are no pro services matching your search. Okay. Why is that important? It means that in order for you to be a pro service, sometimes you have to pay for it. Okay. But I can see ratings. Here's a person who has 94 ratings and a 5.0 star. Okay. That's pretty good for 94. 94 reviews. That's pretty good. Here's a person with 289. And in the world of tech and reviews, we definitely know how to sift through and find those things ourselves. But it doesn't stop there. We talked about bookkeeping, but there's tons of other things that they offer here. Okay. Now, does that mean that we're a partner or that we have a sponsorship with Fiverr? No, we don't. We're not here to endorse Fiverr. We're simply here to show you that opportunities like this do exist. Questions? Any questions? Andrew, do you believe that this is a resource that you might dabble in?
Yes, I use them for different things, but never thought of using them for bookkeeping.
Outstanding. When I see $10, I see 2 Starbucks drinks. When I see $5, I think, maybe a taco from a taco truck. Maybe with some fries. Maybe I'm just hungry. Malcolm, take over.
Yeah, I'm gonna let you get up your soapbox here, man. I'm glad you took the time to get real to answer some of those more emotive components of the process. Like I said before, at this point, I would highly suggest you guys, if you haven't, some folks have already taken advantage of the office hours, but use these office hours during the next couple of courses to make sure all this rings together. With that, I'm going to sign off and hope you guys have a blessed evening.